In this video, Bitcoin is showing a dead cat bounce after dropping to 60,000. Will the leading cryptocurrency be able to hold its level ahead of the Fed meeting? Bitcoin option sellers are once again selling too cheaply. It seems that recklessness and bravado are their new motto, and as usual, an analysis of the weekly option strategy. Hello friends, this is the Optionomics channel, and I'm your host, Roman Vasilevsky. Today, as usual, we'll look at what opportunities there are to earn with Bitcoin options, and in general, what's happening in the cryptocurrency market. And let's, as always, start with Bitcoin. Take a look at what's happening with us. After the Black Swan event, when the price dropped from 74 to almost 59,000 in a week, Bitcoin bounced back to around 64,000. In my opinion, this rebound basically, well, can't really be called significant. It's more like there's a term for when in a bear market, the market doesn't bounce back much, a dead cat bounce. So for now, it looks more like this is a dead cat bounce. And even if we look at the Fibonacci retracement, how much it bounced back, I think it doesn't even reach, as far as I remember, no, actually, it did bounce back by 30% after all. So if you take this drop as 100%, it bounced back by exactly 30%. And I think from here, it could go down again. And what's also interesting is, interestingly, on the Vela website, we can see that after the number of holders spiked sharply when Bitcoin was trading below 60, in just about a week, it almost returned back to its previous level. Of course, it's still far from the 34 to 36 level, but overall, right now, we're exactly at the 40 level. In my opinion, that's quite cheap. That is, as I mentioned before in previous videos, volatility often clusters. What do I mean by that? For example, here there was a sharp spike in volatility, which continued for 1, 2, 3, 4, 5, 6, 7, 8, well, about 9 days. Then notice it dropped. And then there was another small spike somewhere around the end of February. And it often happens that after a spike like the one we saw, there is now a correction in volatility. And there is a high statistical probability that there could be another spike soon. Honestly, I don't know if this next spike will surpass the previous one, that maximum, which was around 54. Because in my opinion, for the kind of drop that Bitcoin experienced, that spike in option volatility was not very strong. And so I think that at the very least, option prices could easily jump back to the 48 to 50 range. But in a favorable scenario, if the decline continues, which is quite possible next week since it's still unclear what will happen between the US and Iran, and we also have the Fed meeting and the decision on the interest rate, that's why I believe the current option prices are not justified. That is, if the market really moves somewhere, then the prices at which options are currently being sold, well, in my opinion, they are undervalued. And option sellers are taking a big risk by selling at current prices. Let's move on to our traditional agenda. So we'll review the previous trade, then make a Bitcoin forecast for the week, choose the instruments we can use to implement this forecast, and also determine the risk size for this week. So let's start with the previous trade. So what do we have? Last week, I opened a more complex position than usual. That is, I opened a position consisting of 3 options. One of the options was for a month, and I still have it. So I bought 5 options at the 52 strike on Bitcoin for $475 each. That is, it was quite expensive. And now actually these options, I've currently recorded them as 0, but in reality, they're not actually 0. Let's see how much they are worth now. Right now, they're worth about $70. So if we record not 0 here, but $70, you can see that they have almost completely lost their value. Although, in my opinion, Bitcoin could still easily reach that level in 2 weeks. Then I had 2 weekly options. And this position is called a risk reversal. That is, it usually looks something like this. I'll show you now. So this is the backtester. So as usual, a risk reversal position looks like this. It turns out that my weekly position looked as follows. For me, that is, I sold the 61 at a level of minus 0.5 and proceeded to purchase the 67 different option contracts. Paul, it's quite an interesting position, in some ways similar to a regular futures contract, but at the same time, notice how interesting it is. So this position, well, the only thing is, here it looks a little different. In my case, there was a range from 61 to 67. It was flat. By flat, I mean not in the sense here as well, because it's flat. It was positive, to be more precise. So if the price had stayed between 61 and 67, as it actually did, I would have made a profit. And if we look at the trades, you can see what happened. 61 option didn't trigger, meaning the market didn't go below 61. And the 67 option didn't trigger either. The market didn't go above 67. So on this sold option, I earned $755. And on the bought one, which I bought it just in case Bitcoin made a strong rebound and I lost $262. So overall, I made about $500 on this position. And it turns out that the final result on the bought option is $52. And this trade for the week is currently at minus $1,650. And the current profit chart looks like this. So I caught a swan. And now it turns out the market is pulling back. I mean, not the market is pulling back, but the swan chart is pulling back. But since the 52 option is still available for now, meaning there are still 2 weeks left for the market to possibly crash, I believe there is actually a chance that this point will also turn upward. And now it turns out I need to open a position for the week. And if last week I wasn't planning to actively buy options, precisely because volatility was quite expensive, you can see that the decision I made was the right one. That is $500 from the position of buying monthly options. I saved that amount. So it turns out that the overall risk on the position, even if it goes completely to zero, will be less than those very same amounts, the 2% that I usually allocate. And since this position was not for a week, but for a month, well, 3 weeks to be exact, the risk turns out to be very moderate. And taking into account the profit that was made, you can see that so far it's just a pullback. So in principle, I could make another 15 trades like this and nothing terrible would happen. So that's regarding the previous trade. Now let's see what can be done this week and what to expect. First of all, take a look. All right, let's remove the Fibonacci for now. What do I see? I see that the market is narrowing right now. And usually when the market narrows after a sharp move, it often signals another move is coming. And so considering that the rebound isn't all that strong, by the way, this is a weekly chart, which can also in principle say something about the scale. This pattern is quite common. So it's often the case that after a candle like this, you get a narrow candle like this one. So what does a narrow candle indicate? It means that someone remembers that the 60 level is quite strong and decided to buy in. But at the same time, the sellers remain strong. And that's why there hasn't been a really strong rebound. I suppose that now the market might, for example, form another candle like this, right around that same 52,000 level. Because if the level doesn't hold, as I mentioned, at the 60 mark, there is a huge accumulation of open option positions, totaling, I think, somewhere around $1 billion. And this is not notional volume, meaning it's not the amount of Bitcoin, but the number of the options themselves. So that's actually a lot. Therefore, if this level doesn't hold, I think there could be a pretty significant drop down. Or, for example, if at the Fed meeting on Wednesday, let's say, the Fed says something positive and there's a possibility that they might decide to lower the rate or somehow reassure the economy, say they'll inject more money and so on, maybe these sellers will really get wiped out and the market will shoot up sharply. Therefore, at the moment, I believe that with the current prices of Bitcoin options, it makes sense to repeat the positions I have opened over the past 4 months. And that's why I expect that this week we have a chance either to break through the 60,000 level or there is this narrowing that we are currently forming. If the price does actually manage to break upwards from here, then I truly think we could potentially reach the significant level of the previous consolidation zone, which was situated right around $70,000 to $71,000. And then, based on all of this information, I find myself fully prepared to provide my detailed market forecast that the market will be either above, let us say for the sake of this example, around 67 to 68, or it will potentially drop significantly lower than the current levels. Well, I think 60, maybe 59. Let's set it at 60 for now, and then we'll choose the most relevant level based on the options. That is, maybe if 60 isn't too expensive, we can take 60. If 60 isn't too expensive, then we can take 69. Because I think that if they break through this level, then even 59 could be surpassed. So that's regarding the forecast. In other words, my forecast for the week is that the volatility we saw last week could repeat itself. And in that case, we'll end up either much higher or lower. For now, I tend to think that the probability of going lower is higher. But as usual, no one knows what to expect from the current president of the United States. Therefore, if he says something inappropriate, or for example, if the Federal Reserve starts to play along with him, we might even see strong growth. So, what's next? It turns out that in our weekly table, you can see that this particular week is very narrow. That is, we had a week with minus 14%, which at one point even dropped to minus 17%. But this week is once again similar to the previous weeks. That is, it's just a 1.6% move after such a drop. The maximum upward movement was 3.5%, and it went down by 2.2%. So it's a small week, and by the way, from a technical analysis perspective, it's worth mentioning that there used to be a pretty good strategy that worked on the Russian market on intraday sessions. So what are inside days or inside weeks? This is when a candlestick is completely within the body of the previous candlestick. In simple terms, it's a narrowing. It often happens that when the price breaks out of the range of this candlestick, the movement can be quite significant in one direction or the other. So for example, if next week the price goes above 64,700, the market could move upward. All right? If it breaks through this low, which was 60,700, it could move downward. So it turns out we've covered the weekly candles. By the way, let me also say why I think it's not worth underestimating the potential for an upward move. Because it's been 59 weeks already. As I said, this is an absolute record for Bitcoin. There is no movement to the maximum of 11%. That is at any moment they can, let's say, carry out the shorters, carry out the bears feet first, because it turns out that for 59 weeks, no one really touched them. They shuffled calmly and there were no sharp rebounds. Therefore, even if, by the way, you look, let me find what you can. For example, you can look at the liquidation map. And you can see that if we take the liquidations, we're in about a couple of weeks, let's say. I really hope that it works, but well, maybe on this specific mobile phone device, I might not actually be able to log into my account right now. Yeah, well, I suppose it's not really that important in the end anyway. Right now, I just can't log in. There's quite a big chunk of liquidations there, maybe on the 4-hour chart, which might show even without logging in. Yeah, let's see. It does show. Yes, right here you can see this yellow zone. It's a cluster of liquidations, meaning around 65. I assume they could very well push the price there and wipe out the short sellers who are too heavily positioned. That's why this week I don't want to rule out the possibility of an upward move. Upward. So it turns out we have a record number of days without growth. Well, not days, but weeks, 59. By the way, it's interesting. What was the previous record? The previous record was, the figure was 24, 34, 34. That was the previous record without growth, although maybe not in 2022 either. So it turns out the previous record for Bitcoin without such a strong upward movement was only 34. This week, it turns out it's almost double the previous record, so to double it, it would need another 45 weeks without growth. That's why I'll also be opening a position upwards. So let me remind you again about open interest. The main open interest is concentrated at 60. Today, we won't be looking at it in terms of specific months because I showed that in the previous video or the one before that. But you can see that if we look at all the strike prices, the upper boundary of our corridor is currently limited at 80,000, while on the downside, there is a very strong options level at 60,000. That is, you can see that the other bars aren't that big, so I don't think there will be much resistance here. So in principle, if, for example, we move upward, I think we could reach 75, maybe even fly up to that level, although there is already resistance at 70. If we look, for example, right now we have a major large semi-annual expiration coming up. But actually, no, you see at 70, the bar isn't that big after all, so maybe they won't defend it. So maybe in the case of good news, we might reach 75. But if we look further ahead, for example, at September. By the way, in September, notice that someone has sold a lot of 75 puts. So maybe if the summer isn't too bad and there isn't a strong escalation in geopolitics, Bitcoin might return to the 75 area by September. But at the same time, if we look further ahead, that is to December, for December, we also have the 80 to 60 range. So these two levels are currently the key ones. So that's what we have regarding open interest. What else can we look at? So according to the economic calendar, the most important event for us is coming up. That's actually on Wednesday. The interest rate decision. So it turns out they'll be discussing what to do with the rate going forward. The rate decision is scheduled for 9 p.m. Honestly, I can't remember right now which time zone I always have set. Maybe it's Moscow time, maybe Indonesian time. But you can see that the forecast is that the rate will not change. But that doesn't mean anything because it's often the case that the Fed can surprise us. So Wednesday turns out to be quite a volatile day. But at the same time, I would also like to draw your attention to. So now, I think it's Friday. Yes, Friday. You see, in the United States, I don't know what holiday it is, but in any case, they don't trade on Friday. And by the way, this might be the reason why options are a bit cheaper. But since we have the rate decision coming up and ongoing geopolitical tensions, I still plan to work from the long side. And now let's move on to our traditional backtester. Let's open the weeks and copy them. Data. As it turns out, this is exactly what we have been doing, and are currently in the process of copying. This is the large dose storage tank. We need it, it turns out, for the week of June 19th, and what we see is what the test spec shows us. It is clear that with the new puts and calls, they are in the positive buy zone, meaning the tester says that buying is profitable. And let's see what it will bring us. For example, a purchase stream was from the second point and costs 480. Let's leave the 60 all points at 480. 60 and 1, 210. The 60s at 205. I'm thinking whether it's worth taking the 60s because I believe that if we break through the 60 level, we'll drop much lower. And maybe it makes sense to take the 59s because they're almost twice as cheap. But at the same time, I believe that if there is a move, it will go below this level. So I'll probably rely on the 59s. Yes, you can see that. The chart for them has leveled out again. Last week, when volatility was expensive, it looked much worse. And here there was a jump. Let's add it to the portfolio. And let's also see what else we can pick among the calls. So for calls, we have 67-240. Where should we go? About 4,000? 68 to 130. Well, I'll buy the bolder ones because usually people prefer 90% of people who lose money on the stock market prefer to take what feels psychologically comfortable. I've noticed that if you want to make money in the market, it's better to take what feels psychologically uncomfortable. And 68% feels psychologically uncomfortable for me to take. Well, 69% is especially uncomfortable, but 68% is basically an intermediate option, $130. Let's add them to the portfolio as well. Yes, here's the chart. You can see that there hasn't been such a move for a long time that could bring profit from these kinds of options. The last one, it turns out, was in mid-September. And let's add those as well. All right, and let's look at the back test. What do we see? A good chart. So unfortunately, we'll need to add the ability to scale in the back tests. I can't see if there was a new high here. I mean, I think maybe there was. It turns out that here the maximum is 388 and here the maximum is 389. No, actually there wasn't. So we were just a little short, but I think it's quite possible to break through this high. So it turns out that for this position, the maximum period without profitable trades was 57. That's actually quite a lot. Oh no, actually that's not right. That's the maximum drawdown period, my apologies. The maximum period without profitable trades was 16. By the way, 16 is already more or less reasonable. He probably means 57 is from about this point. How many did we have here? 389. Yes, so as you can see, the period of low volatility is very long here. And here probably there are exactly 57 consecutive weeks. These are the truncated ones that we use in trading when the equity high isn't being updated. But at the same time, you can see that at least it holds steady, meaning it doesn't drop much lower. So we've chosen the options, and now let's estimate the risk. Let me remind you that at the moment, I still have 52 purchased options, puts in case of a major crash, so right now, I really don't want to take big risks, especially since I had been waiting for a good trade for 4 months before this. That's why I want to be more cautious. I'll probably take a couple of options. Let's take a couple of options each. Let's see what that will cost us. $600. Including commission, in my opinion, that's quite reasonable. if the price really takes off, I think if it goes to 72 to 73, which I believe is quite possible, then we'll have a profit of 8.8 here. If it drops to 54 or 53, I also think there will be a profit of 10. With a risk of $600, I think that's a pretty reasonable position. So with this position, I'm planning to go into next week, and that's probably all for today. Yes, I think we'll wrap up for today. Friends, thank you for watching this video to the end. I would appreciate it if you support me with a like, subscription, or comment. And if you have any questions about options, feel free to ask them in the comments below. Or if you're interested in how I manage my positions, sometimes I make additional trades during the week, you can subscribe to my resource. The link is in the description below. And I would also like to remind you that everything I talk about is not individual investment advice. This is all for educational purposes, and you make all trades at your own risk. The only thing I usually recommend is not to risk too much on any single trade. In my opinion, with weekly options, the maximum risk should be 3 to 3.5% and not more. Well, friends, this was Roman Besedovsky with you. See you again on the Akcionomica channel, and I think we'll meet again next Sunday. Goodbye, everyone.